Okay, guys, the question for today is, did the Fed throw the market a bone? And you go, Dennis, but they didn't lower the rate. So how could they do that? Well, there's a little secret that's going on here. They basically said they're going to ease their QT, their quantitative tightening, which in a way kind of acts like a stealth type of interest rate drop. Wow, interesting. So I guess Jerome Powell was concerned about us and our 401ks. Anyway, what else is going on in the market today? Well, Fed met, leaving the rates alone. They're still concerned about the 3 months worth of increasing inflation. I don't know about you and your family, but yeah, inflation's taken a bite. To give you an example, I mean, our food bills have gone up between just my wife and I. We're empty nesters. Our food bill has gone up over almost close to 100% over the last 3 years. Of course, we know we had high inflation last year, which wasn't very good. And so, dadgummit, I better really be great at doing my trades to make up for the offset that I need with my trading. So if you're joining us over on the YouTube channel, welcome aboard. If you're joining us over on Instagram, glad you're over there also. Just drop a little note on where you're dialing in from. And so let's go ahead and jump over into sharing some information about what's happening with the index. As you see here, Fed meeting rate cuts will have to wait, but QT relief offers a stealth easing. That's what we're talking about there. And so, hey, from the Dude Wonders, I love that. From Washington, okay, Vancouver, cool. And so going down through here is talking about their major concern is that they have lack of confidence that the inflation rate is going to be stabilized and start heading down. And again, as I said earlier, we are all impacted by inflation. I find it kind of amazing that things that really matter to you and me, and this isn't a political statement at all, but things that really matter to you and me typically don't make it into the inflation report. I mean, like gas, like fuel, like food. And gosh, I mean, it's really hard to be a carnivore these days because the price of beef has just gone up so much. Anyway, that's what's going on with that. The Fed rate cut odds for July is only up to 22%. If you remember at the beginning of the year, the odds of a rate cut by mid-year, like by 0.5 basis points, was up about 75%, if not more. But that has kind of slowly melted away, much like our spending power right now. So that's one of the areas. What else we have to look at? Let's go over to Yahoo Finance. There was a couple of things that of interest we'll take a look at a little bit later. AMD, which got whacked from earnings, and SMCI, which got whacked because of AMD's earnings, and the semis along with NVDA. Now, these were darlings of last year, but it's really interesting. I was checking on my Schwab account, because I've been a I've been a TD Ameritrade guy for a long time, but Schwab's getting ready to shift us over into their brokerage account. And I was over there researching it. They've got some really great tools over there. And this isn't a promotion for Schwab, but they've got some really great tools. And one of the things I was looking at is their ranking or their rating grades, very similar to what they do in Investor Business Daily. But I was over there, and on each one of these, AMD, and SMCI and SMCI. There's the chart on AMD. Okay, and we'll take a look at this a little bit later. But doesn't that look a lot like a head and shoulders type pattern? And when the head and shoulder breaks that shoulder, can we say, watch out below because things may in fact fall apart? And what about NVDA? NVDA, the darling of last year. Where was that NVDA? Oh, it was AMD. Let's see. Yeah, I don't have it above there. And the darling of last year, big gains and all that kind of stuff. I know some people are up like over 200 to 300% in their NVDA account. And while I don't make recommendations, but I have to ask you the question, what are you doing to protect your gains? I have also been pulling together information about what do the brightest minds that have been involved with the stock market, like Mark McGinnis, like Bill O'Neill, say about trailing stops and this type of thing. And Bill O'Neill is very succinct about his. He basically says that, 10, 15%, if you're in a big winner, you don't want to give away the profits. We've all known, I've been, what do you mean? I have been that trader who would go up 10 or 15%. I failed to take a little bit of profits off the table right there. And of course, Murphy's Law of trading, the trade went against me and went down to no gain. And I said to myself, okay, Dennis, it's going to come back. We just have to be ready for the comeback. And then it fell another 10%. And so now I'm down 10%. And what do I sell myself? As soon as you're down 10%, that's when you have the propensity to become a buy and hold type of trader. And I literally have held things, and you may relate to this. I've held things until they've gone to zero. Now, that was in the early days. That was about 30 years ago. And I've learned my lesson definitely since then. You have to have an exit plan. I think having an exit plan is actually more important than your entry plan. They're both important, but don't get caught like a deer in the headlight. Look what's going on with SMCI super microcomputer. This is looking not so good. A series of lower highs and lower lows, and it still looks like it's fallen. Do we have a chart down here? No, we do not have one. And so there it talks about the Fed rally now, because now we are getting a nice rally. Let's go over and look at what else is going on with Yahoo Finance. See what's on their list of things to be taken a look at. Fed holds rates at 23-year high. Now, of course, if you were buying a house back in the 1981, 82, I remember we bought a house out in the desert because I was building buildings for the Marine Corps out there by Barstow, California. Hey, give me a shout out if you know where Barstow, California is. Just drop a note and say, yeah, I know where Barstow is. And say, hey, Josh, how you doing, buddy? Good to see you over there on Instagram. Anyway, Barstow's on the way to Vegas from LA. That's where it's at. But the Marine Corps have a big station out there. But bottom line is interest rates and for buying a house back then was about 17, 18%. So yeah, we lived through that, my wife and I. Really amazing. Had a great house out there. But what else is on the news? We'll come back on the semis. Okay, stocks rally as Powell soothes the rate nerves. Job openings hit lowest in 3 years. Let's see anything else we got. Starbucks plunges after brutal earnings miss. The other one I want to take a look at, of course, is Google. We'll take a look at the Magnificent Seven stocks to see how they're doing. They've been all over the chart and all over the map this year so far. And so it's looking kind of ugly. If there is a particular stock you do want me to take a look at, I will take a look at it unabashedly and to tell you whether it is a solid pick right now or not. So just drop in into the chat box exactly what you'd like me to look at. Go on down here. And not a lot going on there. So, okay, let's go over to the what's going on Investor Business Daily. Rate cuts, street related breakout. Google goes wild. We've got to check out why Google has gone wild. And does anybody else want to know why Google has gone wild? Let's go ahead and click on that and see what's going on. Fueled by earnings beat and new AI narrative, Alphabet, better known as Google, gapped up beyond buy range on Friday. That's last week. And secured a spot on the IBD breakout stock index. We'll take a look at Google. Another thing I want to take a look at, of course, is what's going on with Bitcoin. So, hey, Jake, how you doing? I will. RDDT and ALAB. Anybody over there on any of the other platforms? Facebook, X. Okay. So, let's go ahead and so we'll find out why Google is going wild. And we'll proceed from there. So just going down here. Oh, that's really kind of interesting. Yeah, Google may be something we want to keep our eye on. So let's go ahead and jump over. And hey, I'll do what I do best. We're going to start taking a look at the charts. I've been doing the charts now for about 30 years. And I did my training to become a CMT. And I was a point in life where I didn't need any more initials behind my name. So I did the training, and I love how their training goes with the CMT. So, let's take a look at what's the first thing we have on our list. The first thing we have on our list is to take a look at, let's start with the indexes, and then I'll come back to your stuff there, Jake. Love that. So indexes, spiders, S&P. Okay, this is a huge positive move on the S&P today, and you can see my charts. Huge move on the S&P today as price action fell hard with the part of this was due to Meta's reporting out that missing and all that type of thing. That was the big sell-off, and then we had a pause with what was regarding waiting for the Fed, if you will. And apparently the market is liking what the Fed is saying. So now we are breaking back above the 8-day moving average, which is right there. Let me get something you can see a little bit better. Right there is the 8-day moving average, breaking up above that. But interesting, still staying below the trend line. Next up, let's take a look at the Qs. What kind of a bounce is the Qs getting? Okay, real nice bounce. I'm going to get rid of that line right there. Okay, real nice bounce on the Qs also. Looks a lot like the S&P, if you will. We're bouncing up here and starting to take off and move higher. So that's excellent move on that. Hold on a second. I need to change charts. We'll be right back with you. Having some technical difficulty. Nah, not really. We'll get this going here. There we go. Maximize that. I didn't have the proper indicators on that particular chart, and so I wanted to get this over to what I use on a regular basis. Let's go ahead and just share this back out. And thank you very much over there on. Thanks for joining us today. Yeah, if you do find some value from what we're doing, please subscribe to the service. And is that it? I think that's it. That is it. Okay, cool. Now we're back in business with the Qs, breaking back up to the 8-day moving average. That's a positive indication. Note though, it needs to break back up through the 50 and the 34. And however, the big positives on this chart are we have a series of higher lows, 2 higher highs. So I'd anticipate at least one more wave up now and run into this potential resistance of that downtrend line. That puts us up somewhere between, let's say 440, 439, all the way up to the potential of 441. So that's where what's going on with the Qs. The Russell, similar. The Russell has been the redheaded stepchild, as we know, over the last few years, and we're waiting to see if it's going to get a jump. Of course, you need to. There we go. Put in the proper. So similar type situation with the Russell, as represented by IWM. Nice breakout above the 8-day moving average here. We'll see if we can get back and close above the 50-day moving average. And of course, with the premium members on AutoPilot, we're trading both TQQ, which came really close to getting stopped out today. But now we're getting a nice little rebound, and also TNA. First time I mentioned that ticker symbol TNA, my daughter-in-law about blew a gasket. I can't understand why. Somebody's going to have to explain that one to me. Anyway, really nice move up, and just take a look. This move, and this is what I like about trading the leveraged ETFs. That move by itself is almost 8.3%, which is absolutely fantastic. So before we get over into the AMDs, the other thing, let's take a look at the stocks that Jake wanted us to take a look at. Jake is one of the, he's the sheriff over on our Discord channel. He makes sure everybody behaves himself. So yeah, this is okay, Reddit. Okay, I would have to look at Jake, I would want to be looking at the volume on this, but on the daily chart, looks pretty darn good. I mean, this is coming basically at a really nice formation, an IPO type base, and now we're starting to break out. Recognize it's got earnings coming up on the 7th. So, but yeah, clearly above the 8 and starting to move up. Are you long this position right now? Oh, that's right. You're going to have to answer on the text message. So yeah, Reddit. Now, of course, on anything like that, and I just want to give you a highlight. When somebody suggests a stock to you, don't take it per se as, oh my gosh, I gotta go invest in this stock. What you want to do is, this is where I like to use the IBD tools. I'll go over here into, what am I looking for? There we go. Stock list, trends, research. I will go into research and just call up what's called the IBD, the stock screen, no, IBD stock checkup. And let's see what this has to say about Reddit, RDDT. And since it's a newer entity, right now, composite, not too great. EPS, not too great. Relative strength, really not great. C for the SMR, and accumulation distribution, they haven't got it rated yet. So right now in that group, that industry group, Full Truck Alliance, I guess, is number 1. And then Tencent is number 3. And so, but it's a newer entity, and from a, strictly from, oh, you can't see that, can you? Darn it. I'll show it to you on the next one. And the next one Jake had was ALAB. ALAB is actually making headways on the on with its fundamentals. It has earnings coming up here on the 7th. It had a gap down, but it stops almost right on the 8-day moving average, Jake, and it may be getting set for a earnings run. It wouldn't surprise me if that is what it's doing, to see it run up from where it's at right now, approximately 5 to 10% prior to earnings. And that may just be up to this. And it certainly has it within its stride to be able to run 10% very quickly. Let me show you real quick what is going on over here. Let me stop that for a second and go back and show you this other screen. Yeah, that's the one. Allow. Okay. Now this is the IBD stock checkup. Really great stock tool to use. And this is ALAB. Okay, composite rating 87. Really, we like to see it over 90. But what we're finding is the composite rating isn't quite as important as we thought it was in the past. As a matter of fact, if it is kind of low, that may mean the stock is getting ready to take off. EPS 67, a little bit weak on its earnings. 96 on relative strength, though, very positive. SMR rating, not applicable right now. And accumulation distribution. Newer entities don't have that information typically, because if we put in something like Tesla, you'll see it come up. And you'll see Tesla, composite rating 46, not good. EPS 63, not great. Relative strength 26. Well, of course, we know that Tesla's been falling down a dark, deep hole here lately. SMR, maybe it's starting to improve. Accumulation distribution, also somebody's buying Tesla right now. So is it time to get in? I don't know. The other thing I don't like about Tesla right now, it's in the lower half of the industry groups that you see right here. And so that's why So, okay, let's get back over and look at the charts. There we go. There we go. Allow. Okay, so what about Google? Why is Google going nuts? Well, we'll have to wait for that because I'll cover that in just a little bit. But what about AMD? AMD put in this beautiful bear flag. Sorry about that, but a bear flag. And after earnings, it fell from the sky like a turd from a tall cow, but it stopped just around where its support area was. Let's take a look at this on the weekly chart. Now, of course, the weekly is not done yet. While this is an engulfing pattern and it is bearish, it is not a bearish engulfing pattern. The reason I say that, it's not happening at the end of an uptrend. However, we are finding some support about that 145.72 level. Take it one more step out because it is the end of the month, or that's the first part of the month. And so it's a great time to see if on a monthly chart we see anything shaping up. And the things I see on AMD shaping up is my momentum indicator market forecast. We're getting a 2-line cluster on the monthly chart. That there's good news and there's bad news about that. The good news is typically 1 to 4 trading periods after the bad news, after the cluster, you get a rebound. But that's 1 to 4 months in this particular case. What about everything else? We had a 2-line cluster a couple of days ago on the weekly, or a couple of weeks ago, and we did get a rebound, and then we fell apart and basically kind of broke down a little bit. So not so hot. And then what about this? Okay, TSI, are the momentum indicators has shifted to the downside, but prices stopped dead in the water and held up. one of the things you can do from a technical standpoint, if you're a technical analyst person, is just go ahead and activate your trend line because it did break out from that and just move it up a little bit and let that be. And that's a little bit more gradual of a decline, and watch that for a consolidation down here and then finally a breakout to the upside because AMD is not going away. Let's face the fact it is not going away. Next up, though, is our buddy SMCI. SMCI, similar after earnings, fell like a rock. It was caught against a zone of support down here about the $700 level. And we're going to put in a nice little hammer today. However, this hammer is, yes, it's at the end of a downtrend, but there's also a big gap down there. The whole gap constitutes a level of resistance. And so we'll see what happens from there. When I check in this, well, maybe I'm not checking this out. Here you go. Let me draw that back in. I want to double check and draw my, there we go. Put it right about there. And there's our downtrend line that will stay in effect. Next up is NVDA. NVDA, similar type situation, but I want to take a longer term look at NVDA because we are getting a zigzag move to, waved one down, wave, and then a bounce up. Are we going to have a wave two down? We shall see. What's the weeklies look like? The weeklies look like, I'm still up. We had a bullish harami on the weekly chart, which is a positive bullish reversal signal. At the same time, we are hitting a level of resistance about the 887 level. And if you'll note here on the momentum on the TSI, it has still crossed to the downside and it's out of sync with what's happened on a daily chart where it's crossed to the upside. Going back to our monthly chart and on NVDA, not a lot to write home about on the monthly chart. However, we do have a really nice area of resistance up at 974, support down at 756. And how big of a move is not that one. Hold on just a second. I want to know how big of a move that is. I think it's that's about 22%. So if I were long this position in NVDA, I would have a stop loss right below the 756 level because I wouldn't want to give away more than 20% of the profits that I had after it had that 400% run. I just wouldn't. That doesn't make sense to do that. So let's take a look over here. Okay, any of the stocks out there, guys? Now, let's see while Google's going wild. Is it really going wild? Okay, nice move on the monthly chart. However, still operating within the confines of last month's. Of course, this is the first day of the month, but last month's confines. Always go back at the end of the month or beginning of the month and find what was my monthly range. That's one question to answer. The second question to answer is, do I have a reversal candlestick? Number 3, what's my momentum on the monthly chart doing? Because if I'm catching momentum, let's say down over here, if I'm catching momentum as it's swinging back up over here on a monthly chart, that can put you on to a really, really nice ride up to the upside. Similarly, on Google, nice gap. Well, we had a move up last week, highs coming back down in between it. Right now, from a weekly standpoint, if we don't move from this would be a bearish harami. And however, what are we doing here? We're getting a nice bounce off of the 8-day moving average. Really a crappy, well, it's not really a crappy, that's not a bad move, actually. The reason I'm saying that, let me explain to you. The reason I'm saying that that's not a bad move is, excuse me, I had my earnings gap. Now I'm getting a test of that gap. We've come down. Well, we came down, we hit here, and now it's rebounding. This would constitute a retest of the gap up. Whenever you get a breakout gap, 65 to 75% of them are tested by a retracement back down to towards, not all the way to, but towards the breakout. This is a nice one, nice because it came back almost halfway into the middle of the gap up, which is the strongest level of support. And, this doesn't happen every time, but it does happen all the time. So be on the lookout for it. Hey, Mike, I'll be glad to take a look at Kava. Yeah, our members got into Kava today on the big pool. We had several fills today on our watch list of stocks that did the huge pullback, and all of a sudden now they're exploding to the upside. You love it when they explode to the upside, right? It looks like, let's see here. That's funny. There we go. That's weird. Anybody else ever have their Instagram, if you're doing a live stream, have Instagram go to, die on you? So that's what we've got going with that. Quickly running through the rest of the Mag 7s. Apple. Sorry about, I'm not a real big Apple fan, but it's functioning fairly well. Earnings coming up tomorrow. So not going to do anything with Apple right now. What about Amazon? Out of all the Mag 7 stocks, I like Amazon and I like Google the best. I think they have the most potential to the upside. But you have to remember that these Mag 7s, again, earnings fell a little bit. Now we're getting a nice little rebound off of that. NVDA we covered already. And then what else we have? NVDA, Meta. Okay. On Meta, what you can look at this is we have broken down below the 50-day moving average. Look for any, and we've had a death cross to the downside where the 8 is crossed below the 50. That's my modified death cross symbol. It's the 8 crossing below the 50, and it is now rebounding a little bit up towards into that gap. However, once you're below the 50 on huge volume, I'm looking to potentially trade Meta to the downside. Okay, how many? Let's see. What other top 7 Mag 7s do I need to do, guys? There's Tesla. What about Tesla? Okay, Tesla had a really huge move up after Elon Musk visited China. We have broken back above the moving averages, above the 50. And so now I have to kind of approach this from a slightly different perspective. I have to approach this from the perspective of, okay, I may be getting ready to go back into an uptrend on Tesla. I mean, it still has a lot of damage to get past. The 200-day moving average is all the way up here, so it's still below that. So we'll be watching this, but it did have a nice reversal after a 2-line cluster on the weekly chart. What about the month? What about the okay, very interesting on the monthly chart in that this is a huge hammer here after a downturn. So this is a strong reversal signal. While that is the case, price action can test all the way down to the $139 level again before rebounding and still have a bullish reversal signal going. So just be aware of that. Yeah, weekly, nice little pullback. We'll watch this on the daily chart. The other thing that concerns me about the daily chart is just take a look at this. That and also TSI is getting where it looks like it's getting up to a level where we could roll over. We'll see how far it falls. I mean, it has great support down there about 177. And what other you gotta help me out here, guys. What other Mag 7 stocks did I not cover? Anybody? Okay. Let's see. I did Apple. I did Amazon. I did Google. I did NVDA. We did Meta, Tesla, Microsoft. Thank you very much. Let's see what Microsoft actually was really selling off pretty hard this morning. Okay, very interested in Microsoft. Came all the way down into a downtrend line, uptrend line, and stopped dead in the water. We've had earnings. So is this going to hold? This was a breakout area also. So Microsoft, if you want to trade Microsoft somewhere in one of these long-legged candlesticks, in that wick would be a potential entry point, about 393 or so. And on the weekly chart, or monthly chart, of course, not enough to write home. On a monthly chart on Microsoft, that is a huge bearish engulfing pattern. So I would keep I wouldn't be really overly anxious to jump on Microsoft to the upside. It's because look at it's kind of struggling. Look at the volume down here. What's going on with the volume is the selling volume is much greater than the buying volume, as you can see here. And so today, on today's rally attempt, the volume isn't even making back up to the 50-day moving average. So let's take a look at Kava. The Kava Group. Okay, Kava Group, basically, we put this out on our watch list a couple of weeks ago, or not a couple of weeks ago, earlier this week. We had a nice breakout here and move higher. At the same time, we had this, my expectation was we would put in a bounce off of this, around this zone right here, about the 66.79 level. And so that's where we put in an order. And so we get a nice little bounce up off that right now. Let me see how far. Yeah, from where we got into it, it's up about almost 2% very, very quickly. And so it is moving. It is moving in the right direction. So yeah, and so what I'm going to be looking for, Mike, is I would like to see the momentum shift back around to the upside. The volume's okay. While it's a high volume, higher than average volume sell-off, we'd had 4 days of above average buying. So that was understandable. That selling wick right there is telltale. And so that tells us that if you bought here, you may want to be ready to take some profits off the table at about $74. And let's go back one. Yeah, on the weekly chart, right now we're getting a shooting star type of pattern. However, 1 week up does not necessarily make for a uptrend. And so a shooting star type pattern, but again, it really does a good job of defining 74.56 all the way down to what, 66. Oh, that's not a good number. Anyway, some of you know why I said that. Of course, it's missing a 6. Okay. So that basically, any other stocks out there, folks? Oh, I remember. Yes, Jake, I didn't forget. Actually, I did forget, but we'll go back to that in just a second. There we go. I want to start up here with Bitcoin. Okay. Bitcoin, this is the weekly chart. Look, it continues to fall to the downside. I'm looking at Bitcoin. I would put an alert on, if you're a Bitcoin buyer, I would put an alert at about 53, let's say 54,000, and see if you get a reversal signal there. If you don't get it there, I would go down here to the 50,000 point. I don't particularly, trade in Bitcoin, but I know how to read a chart really well. And this is what this chart is telling me. We've had momentum shift. It's accelerating to the downside, as you're seeing with today's sell-off. That's on the weekly chart. What's the daily doing? Yeah, daily is of lower lows, lower highs, lower low, as we continue to fall. The 42,056 is about the 200-day moving average. So yeah, look for this to continue to break down. With that in mind, well, what about the miners? There's a couple of miners that I keep my eye on. One is Mara. Well, the three of them actually. Mara. Okay, Mara. Really interesting entity. Remember, we've got earnings coming up on the 9th. And I don't have a reversal signal, Jake. You mentioned earlier. It is, we had this push up into, we actually picked up some trades down here about the $16 level to $15.50 a couple of weeks ago. It blew up, hit the 50. I mean, this is a classic, just a really pretty classic pattern to, you can learn so much from these kind of patterns. It came up here, hit the 50, hit the downtrend line, tried to get through, kind of like the little engine that could, but this is the little engine that couldn't. And then it started to fall like a rock. And we are continuing to fall. Watch for it down here, Jake. I would put an alert down about the 1491 level. But we're getting darn close to earnings, so I wouldn't be just jumping right out there to get a hold of this right now, unless I had just an absolute fantastic reversal signal. So that's one. And then the other one, too, I like, Riot. Riot did a really nice move. There we go. I don't want to do that. There you go. There's Riot on a daily basis. Similar type situation. Now, Riot did earnings today before the market opened, and we're getting a little bit of a sell-off, but not really dramatic. Note on Riot, what we have going right here is that is a darn good gap up. And the middle of that gap up, about the 941 level, is the strongest level of support. You may want to put in an alert about 963 on Riot. Okay, Riot. I will look at, note that I want it to hit support, but then I also want my momentum indicators to shift back around. And note what we have going right here. I love that. We have a two-line cluster on the market forecast. And that two-line cluster corresponds to between 1 and 4 week, 1 and 4 weeks, or correction, 1 and 4 days, 1 and 4 trading periods before we get a reversal. So the other side of today's candlestick is an inverted hammer, which is a bullish reversal signal. So we'll be watching that going forward. And Lewis, no, I have never traded in a funded account. Other than the funds I put in it myself. And I really can't answer your question because funded accounts are not my sweet spot. And but thanks for asking. So last but not least, and I really like this one, and I owe it to one of our AutoPilot trading members who mentioned this last week, that CLSK is perhaps one of the better miners, higher rated on the IBD rating system. Earnings coming up, I think about the same time. Yeah, on the 9th, after the market is closed. So wouldn't do a lot with that, but it sure looked like it's setting up to want to make a run to the upside. Now, would I if I get a reversal signal here, off of maybe a little bit lower down, because I've got 2-line cluster. My momentum hasn't shifted yet. But if I get a couple of repeatable candlesticks right here that don't go much below the two, about the 1540, 1550 level, that might give an opportunity to buy, Jake. And my upside target on that would be if I move from that back up to these past highs. That's what I like about these entities, 31%, and it does it really fast. Last one we had like that was here, and that ran 44% in 8 days. And I think some of us traded that one for a nice profit. So, all right, we covered a lot of stuff, and we covered it really fast. I just want to basically come back and say thanks for joining us. If you join us on YouTube channel, I encourage you, follow the Market Tech Talk on YouTube. I do have another podcast that comes out on Friday, and then on Monday of next week, my good friend Mike Lamoth and I will be doing the Trading Truths podcast, and we're going to start doing that 4 times per week. And we've got some really great guests lined up that we're dispelling the myths about trading. And so you want to link up and if you want to know how to get onto that, just drop a note in the chat or in the comment section on YouTube, and we will be sending out announcements. But Mike, I wish I could. I don't know. Can I ask you to join? Let me see if I can ask you to join this. See, I don't know if I can or not. Can I? Here, Mike, I'm gonna throw this. I'm just gonna throw this in the chat. See if you can get on. We don't usually. I've never done this before, but let's see if you can join us. Hey, it worked.
Hey, Dennis.
But Mike, I don't see. I mean, I see your face, but I don't see your camera.
Yeah,
man.
I didn't have my camera set up.
Oh, did we lose you? Or you can fix your camera up?
Go. Getting that in. And yeah. Let's see. There we go.
Hey, man.
Hey, Dennis, how you doing?
I am doing absolutely wonderful, Mike. I tell you, it's just phenomenal. I am so excited about us going to a 4 times a month session with the Trading Truths podcast.
Yeah, absolutely.
Now, have we decided what the next topic is?
Well, we were kicking around a few ideas.
Okay.
Some of them, the latest one that a lot of people have been talking to me about has been the news. And
the news.
Interpreting the news, and how do you feel the news is going to respond to, or the market's going to respond to X, Y, and Z event? Is this going to cause prices to drop? Is this going to cause prices to fall? How could we forecast better based off of news-related events? And so I have a few thoughts about it. I'm sure you do as well. So maybe that's a good topic.
I do. So let me ask you a question. This is totally hey, let everybody know this is totally unrehearsed. I saw Mike on and wanted to get him on board, and we're going to be on for about 2 more minutes. But
yeah, this is wild.
You know who Nicholas Darvis is, right?
Yeah, of course. One of my trading heroes.
Okay. Nicholas Darvis traded in a period where he literally was a swing trader, but he did his swing trading via telegraph. Let's just pick 2 things that you think traders today could learn from the way Nicholas Darvis traded.
Oh man, there's so many that they could learn from how he trade. One great inspiration that I took from him was that, gee, if this guy was able to trade part time uh, back then, well, with a telegram, having to draw charts by hand,
Yeah.
well, then I guess there's hope for us. Well, when we've got people like us on here, and you're able to trade from anywhere on your phone for
Yeah.
free, right? How much were the transaction fees back then?
Oh gosh, they were. Well, I can't go back that far because I wasn't around. Some people may think I was around, but I wasn't. No, no. But when I started trading back in the late '80s and early '90s, transaction fees could be $4, $5, $10 a trade. If you call the broker and have him place a trade for you, it was more like $20 to $30 for one
Right,
trade. That's one way. And
right.
then two ways was 60. And I have talked to some people who they were depending on the number of shares, they were doing transaction fees of in excess of $100 one way.
Mm,
Wow.
it's a lot.
So do you think that one of the things I think we could learn from Darvis, though, is I think that would be to learn how to do with less
Yes.
noise, less noise, less interference, shutting the markets up. Because what was cool about what he would do, those of you who don't know who Nicholas Darvis was, he was a professional dancer and he traveled the world. And he learned how to trade. He learned how to basically do swing trading. And he had particular signals that he looked for and watched for. And he would then place his orders. But when he found himself trading from New York, where he could watch the market or where the market was live, he did poorly. But when he was on the road, he had a specific routine, specific discipline that he followed. And guess what happened? He was figuring out what he was going to trade when the market in the US was closed. He would telegraph his broker and say, if this happens with this stock, buy some. Or if this happens with this stock, sell some. And that was it. And he made, what was it, in a year's time? Was it a couple of years? He did like $2 million.
Something like that, yeah. Yeah,
Yeah.
how I made $2 million in the stock market, name of the book.
And so, anyway, awesome. So, hey, Mike, thanks a lot for jumping on. I appreciate that. I
Yeah,
know you,
absolutely. That was unexpected, and well, one of many blessings.
and so,
Uh,
and guys,
That's
Mike has Mara Wealth, and I encourage you to go over there and take a look at his website, sign up for his newsletter, learn what Mike's doing. It's absolutely fantastic and awesome. And
all right.
and again, not only is he a great trader, but he's a great friend, and he has a special place in my life. So with that, Mike, I'm going to sign off and say aloha, God bless.
All right. God bless you. God bless everyone. Take care.
See you, buddies.